Hey guys, welcome back. I'm going to show you a couple of trades I took on Wednesday, March 6th. I'm also going to show you the reasoning behind both fundamentally and technically, so make sure you stay till the end. If you already haven't subscribed, definitely do. So right off the bat, if you're new to this channel, you guys probably won't know this, but I only trade New York. For those of you that have subscribed and you're not new, then you know why we don't look at London session. The very beginning of this bias, we have to understand that this is the last bullish range we get, which means that all this price action that we have is just contained within this low and high. What this is telling us is all of this price action is just internal. It actually doesn't hold a lot of weight. So now if we go back and we actually look at what price has been doing, we're consistently just rebalancing ranges, breaking highs, rebalancing ranges, breaking highs, rebalancing ranges, breaking highs. This is the last range we have, meaning that all this price action here is internal. So the expectation is to continue in the same direction. So our bias is, of course, bullish. So that's from the technical perspective. From the fundamental perspective, for those of you that tune in on Sundays, you'll know that we keep track of all the fundamentals. We talk about this every Sunday and what to expect. A couple weeks ago when price was here, I told you guys we expected price to continue up based on fundamentals. That was the higher probability. If the fundamentals started coming out bearish, we expected a daily rebalance. This was all information I shared with you guys, so you would have known that if price continues down, it's going to the daily rebalance. So as of right now, we have a pivotal moment. NFP either causes this or it causes this, and it's basically all going to depend how the data comes out tomorrow. The path of least resistance is, of course, for DXY to continue up and not change the trend. However, if the job reports come out bad enough, with what we've had over the past 2 weeks, DXY will turn bearish pretty quick. So again, pivotal moment, don't predict, react. Based on this, DXY has been nothing but bearish for the past, probably a better 10 days or so. What this does for us is it actually aligns with our fundamental bias. If DXY is bearish, that makes Euro USD bullish. So we're fundamentally bullish, or we're fundamentally bearish on DXY, which makes us bullish. And we're technically bullish on Euro, meaning buys by any means are higher probability. For areas of reaction, price isn't really pulling back at all. The expectation is to find a trade somewhere within this last lower time frame range. For me, the area that stands out right away is the lit zone where we took the daily high. So remember, for those of you guys that have tuned in quite a bit, you'll know lit's a continuation only model, meaning you could never sell off a lit zone, only buy when the directional bias is bullish. In this case, we're looking for buys. So the order's transferred here. This was the last lower time frame sell range, meaning we're creating a new bullish range. So the expectation is to take this high. If we look to the left here, there's nothing left here. I don't expect a reaction here. This has been deeply mitigated. I don't expect a reaction here. If we look at this area, however, we have vectors, pullback vectors. This is liquidity that could produce a reaction. So now we know our first reactional area in terms of where price is likely to stall. Meaning if price reaches that point, I will be a lot less likely to buy unless price shows me. So what we need now is just to let price play out and show us proper entry. So my entry came pretty late. This is our lit zone here. I wasn't fully convinced this was the move right away, so I don't try catching bottoms. I wait till price is moving in my favor. This cuts down my R's, but it increases the hit rate. And the reason I say that is the lit line that I drew, the invalidation point for the lit goes all the way down to this swing point on the lower time frame, this little guy. So I can react anywhere in here. So I don't want to just start hitting buy here. In this particular case, that's as low as it comes. With that being said, that still doesn't confirm the entry. This is right around the time I get to the charts anyway, so I'd be, half asleep, not really ready to trade at this point. I pretty much just sat and did nothing. We had some news come out at, 5:30. Didn't really make an impact of any kind. Based on all the fundamentals I have, I'm just looking for buys. I need pretty much any reason to get into buys. And essentially all I need to see is price just start breaking out and making lower time frame ranges to the upside. But yeah, ideally I could have probably hopped in here. I didn't. I waited for a little extra confluence, and the reason was I kind of wanted to see what Jolt's job openings was gonna do. If I get a candle like this, I don't want it going through my stops. What I did was I tuned into Powell and just waited for the news release. Again, obviously, had I bought here, it would have been fine, but we have seen big news candles, nothing like a 30 pip candle coming through your stop. So essentially, I just need for the news to get released and me know that I'm not going to eat major slippage. By the size of this candle, I can tell Jolts isn't very volatile. So this does nothing against my bias. Essentially, we're just looking for a continuation. At this point, we could see price hasn't really pulled back at all. And the reason, the way you can tell this really easy is if you just go to the 1 hour. If you look at all the bullish candles, and we only have, 2 bearish candles out of the last, 8 candles, it's telling us the ranges aren't pulling back. The market rhythm's telling us that this is likely not pulling back. So again, market rhythm is like a heartbeat. So for us, if the market is doing this consistently, I'm going to wait for an entry around the 50 mark. If the market is doing this consistently, I know that every time I break a high, my expectation is just to continue up. So I could pretty much just execute and count on the market to continue its rhythm. And again, the rhythm is like a heartbeat or the pace, for the next few hours or so. And usually whatever news comes out, it'll either break the rhythm or continue with the rhythm. So this has kind of been going on all day since Asia. So there's really nothing to do here whatsoever. All we need is a breakout of any kind. It shouldn't take much convincing for you to get into a trade. At this point here, I can just execute this. We broke out of the range. Cover something comfortably. You don't need to cover a lot. If I take this hit, I'll just get back in somewhere else. So the travel distance is there. Also, with the market not pulling back, it also tells me that if price starts running in my direction, I can basically execute again as we're counting on the market to not pull back. So price breaks out again here. Buy rights, I should have executed another stack position here and covered the low. I waited a bit longer. And as soon as this next high got taken here, I believe it was the next candle, I can execute another position on this one. Again, there's not much to cover. And this is again just expecting the market rhythm itself to not come back. I don't need to cover a whole lot. If price takes me out, then I just let the other position run and take the hit on the one, or I get back in, depending what price does. Usually when price is running, it's not going to pull back. In this particular case, we have Powell speaking, so I knew once price broke out of this range, this will likely continue driving our price in the same direction. So not big trades, but you add the two up together and suddenly they add up. So this is kind of capitalizing on momentum, as you would call it. And this all starts from just seeing how price hasn't been pulling back. Like if price is doing this and it continues doing this, it will likely do that right till the end of New York. So that was the trade ideas that day. And obviously we're just looking to continue up, create bullish ranges. Yeah, not much to it. Hopefully you guys enjoyed this. I'll make another recap of today's trades as well and get it up for you guys this weekend. And make sure you tune in on Sundays where I talk about what's coming based on the data we have received or what's possible. It might have you better prepared and on the right side of the market more often. I'm not really going to tell you what direction to go. I'm going to tell you what's possible based on the data we get. And the data we get is going to tell you what direction to go or what's higher probability. But yeah, hope you guys enjoy this and make sure you tune in to the next video.